Hello everyone. I hope you all are safe at home. Yeah. Um, this pandemic that has hit the world has quarantined everyone to their homes, and yeah, so it's something that we have to do right now. Stay home and stay safe. That's the best thing that we can do right now. So during this time, there's something which we cannot stop, that is studying, because studies are extremely important. Yes, your exams are not in May, it's in June. It's in June 19th or something, 20th, I think it starts. But that is not it. Even if the exams are postponed, we get more time to prepare. When we get more time to prepare, we prepare more. Okay, so everybody prepares more, so we need to be faster. Survival of the fittest. Okay, let me introduce myself. I'm Avinash Kulur, Faculty Auditing, Lakshya CA Campus, welcoming you all to the revision lecture of Audit and Assurance, CA Intermediate, Old and New Syllabus both. I'm planning to cover 4 topics today, Essay 200, 210, 220 and 230. Okay, again reminding you, it's a revision lecture. It's not a lecture which will give you complete idea about the topics. Okay, so I want you to have a little bit of idea of these topics before you start in coming to the lecture. I understand maybe today you would not have gone through these topics, but you cannot tell me that excuse, because the post that is being published for my class, I have mentioned every day which topic I will handle. So you already knew these are the 4 topics to be handled today. So as a student who's writing the exams in the month of June, you should have come a little bit prepared. Those who have prepared a little bit, good. Those who have not, you need to pick up a little more quicker. Okay, fine. So from the next class, please go through the topics that is given there and then listen to the lecture. Okay, then what are other things that is required as far the lecture is concerned? One, because it's an online class, you're viewing in your laptop or in your mobile phones. I don't want you to be sleeping on the bed. I don't want you to be sitting on a couch or a sofa, relaxed, having something and just watching like this. I don't want that. Okay, so I want you to be sitting like a student. Sit properly somewhere. Have a book, have a pen, write, note down the important points, understand what I'm trying to say. You would have heard a lot of classes. You would have gone and attended classes. You would have attended my own classes. It's been attending a lot of class. So now what you get is, imagine it's a final class. That's it. Now you need to sit and learn after this. Okay. We need to cover RTPs, MTPs, everything. I'll cover in the coming lectures. Once you get prepared with these topics, then only I can go through the questions. Right now, the topic understanding is what we are dealing with. Okay, so now and a book and a pen, you write, note down whatever is required. Fine. Now the lecture will be in the YouTube channel for a span of 3 hours. Okay, three and a half hours. I intend to finish the topic in 1 hour, with the introduction that is being given now and certain basic things I have to discuss. The lecture today might go for 1 hour 15 minutes, 1 hour 20 minutes. It's for your benefit. Okay, but the video will stay for like 3 hours or 3.5 hours in the YouTube channel. So in case you want to pause and you want to write down some notes and you want to just pause and just go and come back, you can do that, no problem. But finish off watching the video in the 3 hour window that we have provided to you. Okay. Okay, so because so many students have subscribed and registered for the class, around 2000 plus students have registered for the class. Thank you so much for the overwhelming response to the class that when we announced it. Yeah, so thank you, Lakshya, for giving me this opportunity to take this class for the students. I think not wasting much of your time. Yes, book, pen, ready? Book and pen ready? Yeah, good. Yeah, I'm ready. You can see me. I'm all ready with my laptop, my tools, and all done and set. So you be ready with your books and pen. We're going to start audit assurance revision lecture. Okay, fine. Now, so I'm not going to the definition of audit and all that. It's a very simple thing. I'll just discuss very quickly regarding the basics of audit. Now, if now let me ask you a question first. Okay, when I say auditor, imagine I'm saying that there is an auditor there. Oh, an auditor has come. See, the auditor, he's on leave today. The auditor has not come. When I say auditor, Who's the person who comes to your mind? And now, what is the qualification of the person who comes to your mind? I'm sure the qualification would be what? A chartered accountant, correct? We have been learning so hard. We are working so hard. For one simple reason to be what? A chartered accountant. Now, as far as we are concerned, now, yeah. So, chartered accountant. Um, Now, when I say auditor, when in your mind is a chartered accountant, is it always like that? Is an auditor always a chartered accountant? Should an auditor always be a chartered accountant? What do you think? Actually, no. Correct? We know that. Imagine I tell you something called as cost audit. Have you heard cost audit? Yes, you would have heard cost records. There are cost records maintained by company where there is an audit of cost records called as cost audit. Who performs cost audit? Chartered accountant? No, that the auditor is a cost accountant. There's something called a secretarial audit. Secretarial audit. When I say secretarial auditor, is he a chartered accountant? No, he's a company secretary. So understand, these are few examples. Understand when I say auditor, it need not always be a chartered accountant. It need not always be a chartered accountant. It's the chartered accountant becomes an auditor, or chartered accountant's name is uh, is involved with this term called as audit. Mostly when the audit is of what? Financial information or financial statements. Financial information or financial statements. That is why the definition of audit, if you take, it says auditing is an independent examination of financial information. Of what? Financial information of any entity. Financial information of any entity, whether profit oriented or not, irrespective of its size or legal form, when such an examination is conducted with a view to expressing an opinion thereon, Okay, this is the definition of auditing. Just take down the definition quickly. Just take down the definition. Now, I think you would have just written down the definition. It says auditing is an independent examination of financial information. You can see the word financial information. So it is when a financial information is involved. We have a chartered accountant who is appointed to audit the financial information. Now, what is this financial information actually? Now, who maintains financial information, or who has this financial information? Think about it. Now, we as individuals on a daily basis, do we have this financial information? Do we maintain financial information, books of accounts, books and records, financial statements? Do we do that? No, it's actually we have to understand it is basically the people who do business. Business entities maintain financial statements. They maintain financial information. They prepare financial statements. When I say business entities, it could be a sole proprietor, a person doing business alone. It could be partnership. It could be a company. You know, anything. So these are business entities who prepare what? Financial information, or prepare financial statements. Can you tell me what all forms part of financial statements? What all forms part of financial statements? That is basically balance sheet, profit and loss account, notes to account, cash flow statement, statement of changes of equity. All these things forms part of what? Financial statements. So basically, these financial statements are prepared by business entities. Now, why do they prepare financial statements? Because you understand, as far as a business entity is concerned, okay, the business entity wants to know whether how the finance is being managed. What is its position, financial position, what is the profit earned. They would want to know for themselves. And also there will be other people, They're called as users of financial statements. What are they called as? Users of financial statements, like banks, financial institutions, government. Government wants to know whether they're paying proper taxes. So there are various other people who will want to know the financial information of a business entity. Now, for that purpose, every business entity, they will have their financial statements. But you have to understand one thing: these financial statements. Now, imagine there is a business entity. Okay, there's a partnership firm. It prepares financial statements. Now it wants some money. It wants loan. It goes to the bank and it says, see, we are a business entity. We're doing so and so business. We have financial statements with us, and they give the financial statements to the bank. Okay. Now, what will the bank ask? The bank will ask who has prepared the financial statements. The entity would say, the business entity would say, we prepared. So they would say, okay, so anybody has checked this financial statement? They say, we have checked by ourselves. Now, will the bank believe the financial statements? The chances are less or no. So that is why the banks would prefer if that financial statement has been has been examined, or there is an independent examination conducted on that financial information, and that person who has conducted the independent examination has expressed his opinion on how the financial statements have been prepared. Now, that is basically called as audit. So what is audit? Auditing is an independent examination of financial information of any entity, whether profit oriented or not, and irrespective of its size or legal form, when such an examination is conducted with a view to expressing an opinion thereon. So basically, an audit is conducted as an independent examination. What is being examined here independently? The financial information of what? Of any entity. The entity could be a sole proprietorship firm, could be a partnership firm, could be a company, could be a banking company, anything. Now, why? What does that person who independently examines? What does he do after the examination? He will express his opinion. He will express his opinion on the financial information which is being examined. The opinion on whether the financial statements have been prepared in a true and fair view. In what view? In a true and fair view. Basically, every financial statements are supposed to be prepared in a true and fair manner. Be prepared in a true and fair manner. I'll be dealing with opinions and reports in my next session. That is on 24th, I guess. Not 24th is evidence, 26th, I guess. So when we deal with those, I'll deal more with the opinion part. Right now, you understand the financial statement that is prepared by the entity is required to show a true and fair view. Okay, true and fair view. And the auditor, the person who conducts the independent examination, is basically trying to understand whether the financial statements are prepared in a true and fair way. That is the opinion that is required from that auditor who independently examines the financial statements. Do you understand? Now, when I said independently examines, what do you mean by independently examines? Independent examines means a person who is examining the financial information, he needs to be independent, which means he should be unbiased. He should not be influenced. He should be unbiased and he should not be influenced. Do you understand? So basically, independence is something to do with. There are two types. There the code, the institute's code of ethics talks about two independence. One is independence in mind, and second is independence in appearance. Okay, like a homework, I'll give you independence in mind, independence in appearance. Just as a homework, you write it in your notebook as a homework. Go through these two topics: independence in mind and independence in appearance. I'll discuss it in the next class. Do you understand? Independence in mind and independence in appearance. Okay, so independence means you are not influenced, you are not biased, you should not get influenced. That is called as independent examination. And what you have to independently examine? The financial information which we know of any entity. Okay, whether profit oriented or not, irrespective of its size or legal form. The entity could be profit oriented, it need not be profit oriented, the size doesn't matter. Basically the financial information matters here. And why are we doing this examination? To express an opinion, to express an opinion. The opinion of an auditor, the opinion of an auditor. Okay, just take your notebook and write opinion. Okay, and there are two types of opinion that the auditor will express. One could express. One is called as unmodified opinion, and second is modified opinion. I know everyone knows this, unmodified opinion and modified opinion. So opinion divided into two. One is unmodified opinion, second is modified opinion. Now, what is an unmodified opinion? When after the independent examination of financial information of the entity, the auditor comes to the opinion that the financial statements are prepared in a true and fair manner. The financial statements are prepared in a true and fair manner. Tell me, who prepares the financial statements? The entity. We can say the management of the entity. So management, when they prepare the financial statements, it should be showing a what view? True and fair view. So management says the financial statements are true and fair. The auditor, after the independent examination, also says the financial statements are showing a true and fair view. So when the opinion of the management, that is the true and fair view opinion, and the opinion of the auditor after the examination is also true and fair view, when the opinion are the same, that is where we say the auditor's opinion is unmodified. Auditor's opinion is unmodified, because why? The opinion of the management as of and of the auditor is the same. Both are saying the financial information is showing a true and fair view. That is why the auditor's opinion is said to be unmodified or unqualified. Do you understand? Unmodified, below arrow mark, put an arrow mark below and write unqualified opinion, and below that put an arrow mark and write true and fair view. So there is opinion, you divide into two. There is opinion, you divide it into two. One is unmodified, put an arrow mark down, you write unqualified opinion. Put an arrow mark down, you can write what? True and fair view. Now going into modified opinion, there are three types of modifications to the auditor's opinion. There are three types of modifications to the auditor's opinion. Tell me, what is the auditor's opinion? What should be the auditor's opinion actually? It should be that the financial statements are showing a true and fair view. That is where the auditor's opinion is said to be unmodified. So when we say modifications to the opinion, we say the auditor is not giving a true and fair view. There is a modifications to that opinion of the auditor. So the management believes that the financial statements are showing a true and fair view, but the auditor does not believe so. That is where the opinion becomes modified. Opinion of the auditor becomes modified. There are three types of modification. One is qualified opinion. So modified opinion divided into three: qualified opinion, second is adverse opinion, and third is disclaimer of opinion. So first one is qualified opinion, second is adverse opinion, and third one is disclaimer of opinion. Do you understand? Fine. So what is qualified, what is adverse, and what is disclaimer? We'll see later in the coming sessions. Okay, coming sessions. Let's have a small idea. So this is the definition of auditing to have an understanding. Audit is an independent examination of financial information of any entity, whether profit oriented or not, and irrespective of its size or legal form, when such an examination is conducted with a view to expressing an opinion thereon. Okay, fine. Now one more homework that I want to give you is, please write there. See, my question to you is audit of financial information, okay, is audit of financial information legally obligatory to all types of business organization? Please write the homework. Is audit of financial information legally obligatory to all types of business organizations? Okay, I want the answer in the next class. Okay, is the audit of financial information legally obligatory to all types of business organization? I told you, auditing is an independent examination of financial information of any entity to express an opinion. So my question is whether audit of financial information is legally obligatory. Is there a legal obligation on all the types of business organizations to have their financial information independently examined by the auditor? That is the question. You understand? So once the auditor independently examines the financial information, he will express his opinion through his which report? Audit report. That is why I said when we discuss 700, 705 essay 700, 705, etc., which deals with the reporting standards, we'll be discussing more about opinion again. Okay, fine. Now, so let us, shall we move to the topic of the day? We'll start with the topic of the day, essay 200. Yes. Okay. So first standard is essay 200. Now, what is SA? Standards in auditing. What is the standards actually? Standards basically means the Auditing and Assurance Standards Board. That's the AASB. Okay. Auditing and Assurance Standards Board. Okay. So This AASB comes up with various engagement standards. Comes up with what? Engagement standards. Now, these engagement standards, one of the engagement standards are the standards on audit. So, when the chartered accountant is provided with an engagement to conduct audit of financial information, he is required to comply with a standard on auditing. He is required to comply with standards on auditing. Okay, so in that standards on auditing, the first standard that we are going to learn is SA 200 on the overall objectives of the independent auditor and the conduct of an audit in accordance with the standards on auditing. Okay, you can write down whatever you see on the screen. Will be useful for you. Okay, overall objectives of the independent auditor and the conduct of an audit in accordance with standards on auditing. So this standard is going to speak about the overall objectives of the independent auditor. The auditor who is auditing the financial information, what are his overall objectives? Okay, what is the objective that he has when he is doing audit of financial information, and how is he going to conduct his audit in accordance with the standards on auditing, in accordance with the standards on auditing. Okay, fine. So overall objectives. Now, overall objectives, they say the auditor is required to provide a reasonable assurance. The auditor is required to provide a reasonable assurance. Now, what is the name of the subject actually? Audit and assurance. Audit and assurance. So here we have learned, the subject teaches you what is audit. The whole subject that you're learning, that is intermediate students, what you're learning, it teaches you audit as well as something called as an assurance. So through audit, you're giving an assurance. Now, what is the assurance that you get? Assurance that you get after conducting an audit. The assurance that you provide after conducting an audit is a reasonable assurance. Is it what assurance? Reasonable assurance. Now, this discussion now will lead us to understanding the difference between the concept of audit and investigation. Now, everybody has a wrong notion that auditor is an investigator. So imagine that there is a business entity and there has been a defalcation of cash, and or imagine there is a fraud. Okay, the cash has been misappropriated. Now they want to establish the fact, or they want to establish the fact that the fraud has happened and for how much money, who did the fraud, and all that. For that purpose, you need to do in-depth examination. Correct? You need to go for an in-depth examination and you want to establish that fact, and the assurance that the person who is doing the in-depth examination needs to be an absolute assurance, needs to be an absolute assurance. Now that is an investigator. An investigator is a person who investigates, who establishes the fact. He goes into the fact, he does an in-depth examination, and he gives an assurance which will be called as an absolute assurance, which will be called as an absolute assurance. But you look at the auditor on the other hand, the auditor's assurance is not an absolute assurance. His assurance is considered to be a reasonable assurance. Okay. Now, my question to you is, when you look at the difference between reasonable and absolute assurance, we understand absolute is the topmost, 100% absolute assurance. But reasonable assurance, let me ask you, is it a moderate level of assurance or a high level of assurance? Do you think reasonable assurance is a moderate level of assurance or a high level of assurance? What do you think? Is it a moderate level of assurance, reasonable assurance, or reasonable assurance? Hello, I'm asking you, you will have to answer. It should be interactive. I know you're not there in front of me, but still, I believe, I can see that you are just sitting like this, and what is he doing? Come on, it's no, when it's an online class, if you're interactive there, but please keep the door closed. Sometimes they'll be like, what is this guy doing inside the room? He's talking to himself. But I do understand. But still, if you have that interaction, if you maintain the interaction, you will also be interested in the in the subject. Otherwise, what happens, it becomes monotonous. You keep on listening. It is not like a movie. You might sleep off also. So just be a little interactive. Okay, so is it reasonable assurance? Is it like a moderate or a high level of assurance? Understand, reasonable assurance is actually a high level of assurance. It is a high level of assurance, but it is not absolute assurance. It is not absolute assurance. It is a high level of assurance, but it is not absolute assurance. So, auditor's assurance is a reasonable assurance, but not an absolute assurance. Now, what reasonable assurance is he giving? He's saying he's trying to obtain a reasonable assurance whether the financial statements are free from material misstatements, whether the financial statements are free from material misstatements. See, when a person is preparing financial statements, now you would have prepared financial statements for your examination in class, etc. Yes, balance sheet, P&L, you would have prepared. Yes. So when you prepared the financial statements, when you are going for an examination, is is that always your financial statements? Did your balance sheet always tally? Sir, what, sir? What question are you asking? Balance sheet, sir, only tallied in plus one and plus two. After that, it never tallied. Okay, so I understand, but still, balance sheet, does it always tally? Is everything that you do in the financial statement, everything did it go right? No, right. So there has been some mistakes on your part, correct? This is called as misstatements. When you make something wrong in the financial statement, it is called as a misstatement. Now imagine um, Mr. Pranab Mukherjee is the current president of India. Mr. Pranab Mukherjee is the current president of India. Some students, I think, are still believing what is wrong in this. Okay, please understand, Pranab Mukherjee is not the current president. Who is the current president of India? Okay, so you've gone to Google to check many of them. Okay, Ramnath Kovind is the president of India. Now, when I say Pranab Mukherjee is the president of India, when the right statement is what? Ramnath Kovind is the president of India. Now, the wrong statement, this is called as a misstatement. Pranab Mukherjee, president of India, is called as a misstatement. So, in the financial statement, when you go wrong, now what can go wrong in a financial statement? One, your amount can go wrong. Second, your presentation can go wrong. Third, your disclosures can go wrong. Then your classifications can go wrong. Okay, so amount, presentation, classification, disclosure, right? Amount, presentation, classification, disclosure, right? Amount, presentation, classification, disclosure. This will be required for the next session, next class, not next class when I take SA 450. So amount, presentation, classification, disclosure. These are the four things that can go wrong when you prepare a financial statements. Okay. So what auditor needs to do is he needs to understand when the entity is preparing financial statements, there is a chance that there could be a wrong amount, there could be a wrong presentation, wrong classification, wrong disclosure. If there is wrong in these four, it will be called as a misstatement. And when the misstatement is material, which is important, how does a misstatement become important? There are lots of, I told you, users of financial statements who are using the financial statements. Now, if the misstatement affects their decision, if the misstatement is affecting the decision of users of financial statement, we call that misstatement to be material misstatement. We call that misstatement to be material misstatement. So if the misstatement is material, it will affect the true and fair view of the financial statement. It will affect the true and fair view of the financial statement. So what should the auditor do? His objective is to obtain reasonable assurance, about whether the financial statement as a whole are free from material misstatement, whether the financial statements are free from material misstatement, whether due to fraud or error. Now, this amount, presentation, classification, disclosure can go wrong either intentionally, that is fraud, or unintentionally, that is error. Now, you would have made some mistakes when you prepared financial statements. It would be unintentionally, correct? No, unintentionally, that is error. If you do it intentionally, that it is fraud. Sometimes to tally the balance sheet, remember, no, to tally the balance sheet, you would have made intentional changes in some amount. Now that is called as fraud. Okay, so when the entity prepares the financial statements, they might have made some misstatements, maybe intentionally or unintentionally. So auditor needs to obtain a reasonable assurance whether the financial statements are free from material misstatements, whether due to fraud or error. Now, which will enable the auditor to express his opinion. Basically, he needs to express opinion whether the financial statements are prepared in all material respects in accordance with the applicable financial reporting framework. What is it? Applicable financial reporting framework. Okay, so one tip I'll tell you, whatever new words that you find, like reasonable assurance, applicable financial reporting framework, material misstatements, write it separately somewhere and keep. Okay, just have a vocabulary, just have a place where you can write all the important words in audit, and you can just keep on revising it so that these words always stay in your mind. Okay, so the financial statement should be prepared as per the applicable financial reporting framework, as per the applicable financial reporting framework. So for every now company, if you take a company has an applicable reporting framework. Now, when they prepare their financial statements, they cannot prepare in the way they like. They have a reporting framework which is applicable to them, and they need to prepare the financial statements as per the applicable financial reporting framework. Okay, so the applicable financial reporting framework tells you how to present, how to classify, how to disclose. Okay, it tells you the applicable financial reporting tells you this, and when then you have to prepare the financial statements and you present, you classify, you disclose, you show an amount. If there's a difference between how you have done and how it should have been done as per the applicable financial reporting framework, the difference is basically called as misstatement. The difference is called as what? Misstatement. That means the difference between what you have done and what you should have done as per the applicable financial reporting framework. So, when the financial statements are prepared as per the applicable financial reporting framework, we say the financial statements are showing a true and fair view. Do you understand? So when the financial statements are prepared as per the applicable financial reporting framework is when we say the financial statements are showing a true and fair view. So what does the auditor do? He will do the examination of financial information to obtain reasonable assurance whether the financial statements are free from material misstatements, whether due to fraud or error, which will enable to him to express an opinion whether the financial statements are prepared as per the applicable financial reporting framework. So whatever examination he does is ultimately to make sure that the financial statements are prepared as per the applicable financial reporting framework. So he needs to obtain the reasonable assurance that the financial statements are prepared in accordance with the applicable financial reporting framework. Okay, then he will report this in his audit report, communicate as per the standards in accordance with the whatever findings that he has. This is the overall objective of an auditor. So what he has to do, he has to perform his audit procedures, obtain a reasonable assurance about whether the financial statements are free from material misstatements. What happens when the financial statements are free from material misstatements? Automatically, when the financial statements are free from material misstatements, it is prepared as per the applicable financial reporting framework, and the financial statements becomes a true and fair view financial statements where the auditor's opinion becomes unmodified. Okay, if you have not understood misstatements, etc., when we discuss reports, you'll understand this better. So auditor needs to provide what assurance? Reasonable assurance. What assurance? Reasonable assurance. Now, my question is, why is that the auditor is only able to obtain reasonable assurance? Why is that he is not able to obtain an absolute assurance? Why is that the auditor is not be able to become an investigator? Why is there the difference between audit and investigation? See, because the auditing has certain inherent limitations. Audit has certain inherent limitations. So what are the limitations of audit? One is the nature of financial reporting. You understand what financial statements we are examining. Financial statement itself, the nature of that financial statement is such that you tell me, does the financial statements which you prepare, does it have estimates? Tell me, does it have estimates? The financial statements that you prepare, does it have estimates? Does it have provisions? Are all the amounts accurate? No. Every amount is not accurate. There are provisions, there are estimates. So you understand the financial statement itself contains judgments, estimates. Okay, all these are contained. So when financial statement itself contains judgments, estimates, etc., that nature of financial statement itself is not giving all the amount in an accurate manner. So when you are auditing an accounting estimate, automatically your assurance is also a reasonable assurance. No, you are not auditing every figure which is accurate figure. So that is why the nature of financial reporting becomes your limitation. Now, nature of audit procedures. What is nature of audit procedure becoming your limitation? See, generally students have a thought that nature of audit procedures means we cannot do all the procedures. We don't have time to do all the procedures. Wrong. That comes in the third point. There is balance between what? Time and cost. Now, what does nature of audit procedures means? The procedures that the auditor performs. The procedure that the auditor performs is too much dependent on the management. Only if the management is providing us with proper information will we be able to actually come to an opinion. You understand? If I'm doing an audit, if I'm performing audit procedures, but the management is not giving me proper information, I will not be able to express my opinion. So my assurance is hugely based on how the management is cooperating with me. That is nature of audit procedures. Only see, even if I want to obtain the assurance, I can do it only if the management cooperates with me. That is nature of audit procedures. What is this balance between time and cost? It is basically, nobody likes to spend money on audit. They feel the money spent on audit is a waste of, it's a huge cost. And the time, you do the audit when the business goes on, so there's a time involved there. You cannot take a lot of time to do the audit. You cannot keep on doing audit. So to have a good balance between time and cost, what you will do then, you will start reducing your audit procedures. You will prioritize your procedures. You'll do some testing. You'll do some sampling, due to which everything cannot be tested, everything cannot be audited. So due to which your assurance slowly becomes a reasonable assurance. And again tell you, reasonable assurance is a high level of assurance, but it is not an absolute assurance. Do you understand? So because of these inherent limitations of audit, because of these inherent limitations of audit, the assurance of the auditor is a what assurance? Reasonable assurance, which makes us understand investigation does not have any inherent limitations. You understand? Investigation does not have any inherent limitation. That is why investigations assurance is a what assurance? Absolute assurance. Investigations assurance is an absolute assurance. Because auditing has certain inherent limitations, the assurance is a reasonable assurance, or the expectation of the people is also that you would be giving a reasonable assurance on whether the financial statements are prepared in all material respects in accordance with the applicable financial reporting framework. This is the overall objective of the auditor. Okay, so overall objective, just take 2 minutes and just go through the overall objective. 2 minutes, 2 minutes. When I say 2 minutes, read. You understand? And drink some water. You can drink water also. But just go through the overall objectives quickly. Yeah. You may also pause and go through. Okay, now listen. So, now coming to the rest of the points in 200. So this is the main point, overall objectives. Then this talks about certain ethical requirements. Now every chartered accountant, every auditor who is doing the audit of financial statements need to comply with certain ethical requirements. One ethical requirement is integrity, that is honesty. Then objectivity, that is being straightforward, unbiased. Then you have the fourth one, confidentiality, that is making sure you don't disclose the information that you obtain during the course of audit to whom? To the outsiders or third parties. Yes, but there are two exceptions to confidentiality. Take the notebook and write, there are two exceptions to confidentiality. One, when there is a legal duty to disclose, legal or professional duty to disclose, and second, with the permission of the client. Okay, confidentiality is not disclosing information obtained during the course of audit to what? To the third parties. Okay, but two exceptions. One, when there is a legal or professional duty to disclose, and second, with the permission of the client. Second, with the permission of the client. For example, take 143 subsection 12 of the Companies Act. Those who don't know, go and check 143 subsection 12 of the Companies Act 2013, where the auditor has a duty to report on fraud. Duty to report on fraud to the central government when the fraud is involving an amount of 1 crore or above. Now, there the auditor is reporting a fraud to the central government. Central government is a third party. But still, auditor needs to report it because there's a legal obligation to disclose. 143 is a duty of the auditor. So that is an exception to the principle of what? Confidentiality. Okay, so ethical requirements, point number one, integrity. Point number two, objectivity. Point number three, confidentiality. Point number four is professional competence and due care. What is professional competence and professional due care? So when you do audit, one of the ethical requirements says you should be professionally competent. What do you mean by professionally competent? You need to be updated. the changes that happens in the accounting, auditing, taxation, law environment. You need to be updated. That is called as professional competence, and your work should have professional care. Professional care. And last is professional behavior. What is professional behavior? Don't behave in such a manner which will bring disrepute to the profession of the chartered accountant, profession of an auditor. Okay, so behave professionally. That is called as professional behavior. Don't bring disrepute to the institute. Okay, these are the 5 ethical requirements. Tell me, repeat. First one, integrity. Second, objectivity. Third, confidentiality. Fourth, professional competence and due care. Fifth, professional behavior. Repeat again. 1, integrity. 2, objectivity. 3, confidentiality. 4, professional competence and due care. 5, professional behavior. Ethical requirements. Point number 1, integrity. Point number 2, objectivity. Point number 3, confidentiality. Point number 4, professional competence and due care. Point number 5, professional behavior. You understand confidentiality has how many exceptions? 2 exceptions. Don't forget. Okay, fine. Then the standard discusses on the responsibilities of the management. Management means the entity. Now, the auditor's objective is to obtain reasonable assurance whether the financial statements are prepared accordance with the applicable financial reporting framework. Whereas, let's see what are the responsibilities of the management. What should the management do? The entity needs to maintain proper books of accounts, prepare the financial statements as per the applicable financial reporting framework, safeguard the assets of the entity, design, implement and maintain the internal control system of the entity, and provide information explanation required by the auditor. These are the 5 responsibilities of the management. One, they have to maintain proper books of accounts. Then they need to prepare the financial statements as per the applicable financial reporting framework. All the assets of the entity needs to be safeguarded. Something called as an internal control system for an entity to achieve its objectives. To achieve its objectives of maintaining books of accounts, preparing the financial statements, safeguarding the assets, it is very important to design, implement, and maintain what internal control system. This is clearly linked. Good internal control system will help you to do all this, and these are your responsibilities. So implement this also, so that these objectives or these responsibilities are properly provided by the management. And when the auditor requires some information explanations, the auditor will the management has to provide. This is called as responsibilities of the management. Okay, fine. Now going into I'm not going into audit risk right now. We'll discuss that when I take the concept of audit risk. Okay, now there are 2 concepts which are very important in the standard as far as the audit is concerned. One is the word professional skepticism. Professional skepticism. I know some people know why I'm nodding my head, because that is how we say skepticism. Professional skepticism. Now, what is this professional skepticism? It is basically the attitude. It is basically the attitude. Now listen to me carefully. Now, when we discuss the difference between auditing and investigation, the investigator is a person who has a doubtful mind. Investigator always doubts. His mind will be doubtful because why? He needs to establish the fact. He needs to do an in-depth examination. For that, he needs to be doubtful. But now the question is an auditor also doubtful? The answer is no. Auditor should not be doubtful. Auditor's mind is not a doubtful mind. His attitude is the attitude of professional skepticism. He is skeptical. Now, what is the difference between being skeptical and being doubtful? Now, doubtful is a person who doubts in everything. Skeptical person actually has a questioning mind. He is alert. He is alert, and he does critical assessment. There are 3 things that which you need to focus. One, he has a questioning mind. You question. Sometimes if you feel something has gone wrong, you can question. That is called as questioning mind. You need not accept everything that comes to you just like that. You can have a questioning mind. Then you need to be alert. That could be conditions which could indicate possible misstatement. Financial statements might contain misstatements. Always remain alert. And whenever you obtain audit evidence, you critically assess it. Don't accept the audit evidence just like that. If you feel there is something wrong, you assess it, you critically assess it. So the attitude of the auditor, which includes a questioning mind, being alert to the conditions indicating possible misstatements due to fraud or error, and critical assessment of audit evidence, is basically called as what? Professional skepticism. Professional skepticism. That is the attitude of the auditor. Now, why does the auditor maintain professional skepticism? Because if the auditor is alert, if he has a questioning mind, if he is has a questioning mind, if he is critically assessing audit evidence, it will reduce his risk of overlooking unusual circumstances, overgeneralizing when drawing conclusions, and using inappropriate assumptions. Now, when you maintain professional skepticism, it will reduce your risk as an auditor of overlooking unusual circumstances. You will not, you will make sure that you are going, when you're alert, when you have a questioning mind, the chances of overlooking unusual circumstance will reduce. The chances of your conclusions becoming overgeneralized will be reduced. The chances of you giving inappropriate assumptions will reduce if you are maintaining the attitude of what? Professional skepticism. And you need alertness with respect to your audit evidence. Your audit evidence could be contradictory. That means one evidence that you receive, other evidence that you receive could be different. So there could be contradiction. So for that, finding out that contradiction, you need to remain what? Alert. The documents that you get to check the reliability, you need to remain alert. For conditions, to find out the conditions which indicate possible fraud, you need to remain alert. To understand whether you need to perform additional audit procedures. Sometimes when you have procedures, there are, whatever the auditor does in his audit are basically audit procedures. Now for the auditor to decide whether additional procedures are required, you should remain alert, because the circumstance will tell you whether you need to perform more procedures. So alertness is required with respect to check whether there is any contradictory audit evidence, whether the documents are reliable, whether there are conditions indicating possible fraud, whether there are any circumstances requiring additional audit procedures. For all these, you should have what? Alertness. You should have alertness. Okay, so alertness is required with respect to these things. This is called as professional skepticism. Professional skepticism. Okay, everybody do this. Professional skepticism, very very important. Okay, I think you can take 2 minutes and learn professional skepticism properly. Okay, professional skepticism is very 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 important. Okay, now professional judgment is something which is not much relevant for your examination purpose. Just to make you understand, whenever an auditor is taking a judgment, he should use his training, knowledge and experience. He should use his training, knowledge and experience in the field of audit, accounting and ethical standards while taking any judgments. Now, that is called as a professional judgment. When you use your training, knowledge, experience, whatever training, knowledge, experience you have got in the context which is provided by audit, accounting, ethical standards for while taking judgments, is called as a professional judgment. Okay, all these things are CA final topics, not required. You learn professional skepticism, important for the exams. And when you do the audit, you need to conduct audit in accordance with with the standards on auditing. Now, every auditor shall comply with the standards on auditing which are relevant to the auditor. Okay, you should comply with the standards. Now if you are not complying, you should tell the reasons why you are not complying with the standards. What different did you do from what is given in the standards, that you need to mention. Okay, so professional skepticism is very important question. Please learn it, very very important. Okay, now one sentence which has to be focused here is the auditor's opinion. Now when we express an opinion, when we do the audit and express opinion, it does not assure the future viability of the entity, nor the efficiency or effectiveness with which the management has conducted the affairs. What does this mean? Now the auditor's opinion, now when we say the financial statements are showing a true and fair view, no, the true and fair view of the financial statement is not an assurance that the entity is viable for the future. That means the entity will continue. There is a future viability. The business will grow. The money will be earned. The profit will be earned. No, that is not the intention behind the opinion of the auditor. The opinion of the auditor's intention is only to communicate whether the financial statements are showing a whether financial statements are showing a true and fair view. When you say it is true and fair view, when it is prepared as per the applicable financial reporting framework. Okay, so to and to when you obtain the reasonable assurance that the financial statements are free from what material misstatements. Do you understand? So this is basically the important points in essay 200 that is required right now for our discussion. Rest of the topics which I have not dealt, we'll be dealing in the coming classes. Okay, so these are the areas that you require here. Now the students of old syllabus, this is essay 200 for you. You have to learn it as it is. For students of the new syllabus, you can take your chapter 1, That is nature and objective, this chapter. And in this chapter you will have all these definition of auditing, then you will have these what do you say, types, all these points, advantages, inherent limitations of auditor, then all these points that we have discussed right now regarding audit, ethical requirements. Okay. And one thing that I want to give you as homework is standard setting process. Okay, this is very important. Standard setting process. Just go through this. Just go through this examination point of view. It is important. How is a standard being set? You know, how are the standards being set? As I told you, the various engagement standards, they are given you properly in your text. This you can go through very easily. Okay, so all these points are given in your textbook. See, ethical requirements relating to audit integrity, all these points, independence, which I have told you to learn, independence. Then you can see independence here, threats to independence, safeguard, then professional skepticism, the points given here. So all this what I have discussed now. Okay, so please go through these points from your chapter number 1, which I have discussed right now. Okay, fine. So basically, this is what is the important areas of essay 200. Now we have 3 more to go. Essay 210, 220, and 230. Okay, fine. So we'll in the next part we'll go for essay 210, 220, and